The FTSE 100 continues to push to record highs ahead of the Bank of England meeting on Thursday. Hello and welcome back to our channel. My name is Daniela, and in today's video we're going to be previewing the Bank of England meeting and looking at some charts of UK assets. But before we get into it, please like this video, comment, subscribe, and if you have any questions or suggestions, feel free to leave them in the comment section below. So as I was saying, the FTSE 100 pushing to new record highs on the daily this past week, heading into the Bank of England meeting on Thursday. Now, we have this general risk appetite in the general stock market. We're seeing positive momentum return. The easing of tensions in the Middle East has helped the risk appetite to improve. But looking at the Bank of England meeting, markets are pretty certain that we're not going to see any change to monetary policy from the Bank of England at this meeting. There is a 90% chance currently priced in markets that rates remain at the current rate of 5.25%. Now, that isn't really a surprise because we've seen, yes, a positive improvement in the data from the UK, but we're still seeing consumer inflation above that 2% target, currently just above 3%. So it still has a way to go to get to the long-term sustainable target. And we know that within the disinflation process, the last leg of that process can be quite stubborn. In fact, in the US, we've seen the disinflation process stall completely. We've seen a CPI coming in higher than expected in the last 3 months or so. We haven't quite seen that in the UK just yet. We are expecting to see that CPI data continue to drop, but it's going to be a case of measuring exactly when that CPI is actually going to make the last advance towards that 2% target. But more importantly, not only when it reaches that, but also, is it sustainably going to stay there, or are we going to see potentially another resurgence in price pressures? So there's a lot to consider for central banks right now. We are getting to that point of balancing growth and inflation. Is becoming quite tricky. And in the UK, we have seen growth struggle. We know in the second half of 2023, we saw a technical recession. GDP has recovered in the first quarter of 2024, but still showing subpar growth. So, of course, that is an area of concern for the central bank, but also trying to make sure that inflation doesn't rebound if there is any help to stimulate the economy. So for now, no change expected to rates at this meeting. Markets are currently pricing in 53 basis points of cuts for the remainder of 2024. The first one coming in August and the second one in December. Now, there is a high chance that we could see a rate cut in August, but of course, messaging from the central bank is going to be key to determine where to go from here. We are going to see updated figures from the central bank. We're going to see updated CPI and growth forecasts from Bailey and his team. So, of course, that is going to play a big part in market momentum on Thursday. But comments that we've seen from the central bank recently, specifically from Governor Andrew Bailey, is that he believes that the central bank or the Bank of England will be able to cut rates in 2024, and that there was going to be a big drop in CPI for the month of April once the data is released on May 22nd. So Governor Bailey is still confident that the bank is going to be able to cut rates despite the lack of progress potentially in the first quarter of the year towards that inflation target. There's going to be a lot of focus on the data. The bank is still pretty much data dependent. That, of course, means that we could see some volatility in the next few months as the latest data points are released. But generally, heading into this meeting, expected to see no change, expected to see updated provisions, potentially seeing a little bit of a drop in that longer term forecast for CPI and growth. But also those comments from Governor Bailey and his team expected to continue to show that rate cuts should be coming in 2024. With regards to the vote split, expected to remain unchanged from the previous meeting, 8-1 vote split, 8 unchanged, 1 cut coming from long-term dovish dissident Dingras. So no expectations for a change there. It's all going to be about the messaging. How is the central bank seeing the monetary policy in the next 10 months or so? And when are they actually going to be able to start cutting? Looking at the charts, we'll kick it off with the FTSE first. You can see the strong momentum here pushing higher, having broken above 8,300. seeing that bullish momentum really intensify. As I said, we've got that general risk appetite return to markets, but also we've seen some good performance from financials, from consumer staples coming after the earnings. So all in all, positive momentum here. Expectations that rates will be cut at some point this year has also been driving the stock market higher, not just in the UK, but also in Europe and the US. So all in all, positive momentum remains. The RSI has pushed above the previous high, currently hovering around 77. So yes, we have become slightly overextended within this bullish rally. I wouldn't be surprised if we do see some minor pullbacks along the way. In fact, since the start of this rally back here on the 19th of April, we've seen a few instances where we've had a day or three where we've seen some retracement, allowing for new buyers to come in. I think we're at that point where we could see that happen once again. The daily move already has been pulled back from that high at 83.55. So potentially seeing a day or two of retracement, resetting some of these overbought conditions and allowing new buyers to come in. But all in all, the path of least resistance remains higher for the FTSE 100 in the short term, unless we see any indication at the meeting on Thursday that the Bank of England is no longer considering cutting rates this year, or inflation is expected to rise once again, therefore really sending a shockwave through those expectations, then in that case, we could see the FTSE reverse lower, potentially dropping all the way back towards 8,000 in the next few days. But that is highly unlikely. As I said, expectations are for everything to remain pretty much on course. There had been no change, but expected to see rate cuts coming soon, as inflation is expected to have dropped significantly in April. If that is the takeaway from the meeting, then path of least resistance continues higher for the FTSE 100. Let's take a look at cable. Again, the pound has seen a little bit of a pullback in the last few days. I think in this case, we are still playing off that rate differential between the US and the UK. The UK central bank expected to cut rates before the Federal Reserve. So in that case, favoring the US dollar, so weighing a little bit on the pound. Nonetheless, the resilience in the UK data has also allowed the pound to push higher. So not as clear cut here, but again, I think if we do see talk about rate cuts from Governor Bailey on Thursday, then we could see cable retracing a little bit more, potentially all the way back to 124 as an immediate reaction to that. But really just seeing potentially also some sideways consolidation as the latest data comes out, both for the UK and the US, and markets position their expectations for monetary policy for both central banks. That is it for today's preview of the Bank of England meeting. Thank you so much for watching, and don't forget to subscribe to our channel.